Good morning, everyone. Welcome to the week 10. We're going to cover today prepare business activity statements and tax return for individuals and sole trader businesses and partnership. Right, we'll move into the best preparations. As we discussed in our previous workshop, the GST will be calculated based on the two accounting method, one called GST cash basis, which is you going to account that your GST calculation only for cash transactions to calculate the GST. So the cash basis anything less than 10 million turnover, they can choose to the cash basis or accrual basis. The cash basis mean you are going to calculate the GST collected and GST paid based on that amount paid or amount received, right? Accrual basis, if the business is more than 10 million, they're required to have a accrual basis GST calculation. Accrual basis means you're going to calculate the GST based on the total invoice generated and bills received. So it's mean your liability to pay any bills. You can claim the GST, any of your entitlement for your invoices. So whatever invoice you generated, regardless of it's paid or not, it's mean credit and say cash, both together you can include that your GST calculations. If the business is less than 20 million, we're reporting quarterly reporting. Quarterly reporting have three type: full reporting and simpler reporting and installment method. So we focus on that full reporting and simpler reporting. You can see full reporting have G1, G2, G3, G10 and G11 and 1A and 1B. Simpler report, G1 total sales and 1A and 1B. So other one GNC installment method, it you're going to work out and give you the total GST amount what you require to pay. Now we will go back to that in our zero practice manager and see one of the example how you go into that understand this GST reporting. So I will click one of that one and press on helmet. If you go to that GST part, you can see here full reporting. So GST reporting method. If you click that full reporting method, you can see here G1, G2, G3, G10, and G11. If you go to the summary section, you can say 1A and 1B. Right? So that's called full reporting. If you go to that simpler report, you can see only here G1 and summary section 1A and 1B. Right? 1A and 1B. So this is the way you're going to report. You cannot change the reporting during the financial year. Normally, if you want to change the full reporting to simpler to full reporting, you should wait until end of financial year. The first quarter, your July to September quarter, you can change it every financial year if you require to change it. When you prepare your best statement through the zero practice manager, if you wrongly put it this one, for an example, actually reported full BAS previous period, if you go and elected to simpler BAS, that particular activity statement cannot be lodged to ATO because this will come as a error. So therefore, you want to make sure that what is the previous period or what is that previous lodgement, full reporting or simpler reporting. And when we go to that cover page, you can say there are some information, especially document ID and what is the accounting method. You can see cash basis and accrual basis. This also same, you cannot change the cash basis, accrual basis during the financial year. So therefore, you can only change start of the financial year. So you should make sure that you are having that right GST accounting method. So how you knows that your new clients previous reporting methods and your previous account that GST reporting method? Better way to go to that your tax agent portal. When you have that contract, you will have the access to that and click on that your client and click on the history. Now you can see previous tab, the best statement. So if you click the previous best statement, you can see here what is the document ID, which accounting GST accounting method they use, accrual basis or cash basis. You can see from here. You can see that what is the document ID. Then if you click that your detail, you can see this is full report or simpler report. So for example, this client is the full report. So when you prepare in your zero practice manager, if it is that client, you're going to put the full reporting. So you're going to check with the ATO portal and to decide what kind of report you're going to what GST reporting method you're going to use. Then you're going to see what the accounting method, cash basis or accrual basis, based on the GST report accounting method in the top. So reporting method and accounting method, if you work it out, you will get it your document ID from here and start to prepare. So this is the way we're going to prepare the BAS returns. Now we will come back. When we prepare the BAS returns, when we prepare the BAS return, we have two type of clients. Clients group number one, they have no accounting software, right? Like a little Uber driver or cleaner or plumber or electrician. They may keep it all of their receipts and give it to you to do the BAS. Second group of clients, like they're using some accounting software such as Myop or QuickBook or Recon or Zero. If they're using that accounting software, we could do that best through the accounting software. If they have no accounting software, you are going to use and work it out through the Excel worksheet manually. So we have two type of clients, and the clients group number one, we are going to talk about that without accounting software, how we going to prepare the BAS. And second one, we are going to talk about that clients with accounting software. So I will go and open that. So your homework 10, which is provide you some expenses and income details, and we will work it out. So I'm going to share with you a Excel worksheet. First one, start with the so sales report. Click that one. Right, you can see the sales report, which is you can download from your homework expenses. You can see that here there are four columns: the dates and invoice number and total invoice amount and date of receipts and amount received. So if the client have no accounting system, what they will do, they will give you that their invoice book to you. So you're going to write down all the invoices and invoice amount. Then they will check with that what is the amount they paid. That's the way you're going to fill it out one Excel worksheet. Now, if they're using the accrual basis system, you're going to use that column C. Why it is? That amount, invoice amount, that's more than enough to make it out your accrual basis GST calculation sheet. You no need to have a paid or not, because total invoice amount going to be considered as a GST collected. If they're using the cash basis, you're going to use the column E, which is going to show that what is the actual amount received, right? If you not receive the money, for example, this column, this draw, you're not going to include for the GST calculation. So that's a way you're going to calculate your sales income. Now we will go back to in our uh, uh, operational expenses side. So I'm sure that you can see that expenses side here. So when you have that expenses, they will give you all the bills in a box. You're going to put the date wise, all the expense details, and you're going to include all the total sales here. So I can show you that operating expense sheet, which is available. One second. So here it is. So I'm sure that you can, I'll make sure that you can see that actual operating expenses. Right. Okay, here it is. So you can see the column one going to say what is the date and what is that information here. Then going to show what is the bills from the suppliers. Then the column D going to say amount paid. If you are using that accrual basis, you're going to use that column C, the amount which is total in bills you receive from the suppliers, regardless of you paid or not. But if you are using that cash basis, you're going to use next column, column D, because that's the column is important that you're going to only calculate the GST paid based on the amount paid to suppliers. So different between the two columns you're going to use. You were asked to that prepare that activity statement for activity. You were asked to prepare activity statement cash basis and accrual basis. So you're going to work it out which column you're going to use for your each exercise. Now, how we going to calculate that? What is the task in your BAS? You want to calculate how much GST collected, how much GST paid. So normally we a formulated Excel worksheet we will use. You can see now that's a it's available. Start with the GST detail report. So there are a number of pages. One of that cover page. When you go to this last page, you can see the business information. When you provide the business information here, it will be pre-populated every seats. It is a formula and locked. And when you go to that here, declaration page, it will show you the summary of your work, right? So what you're going to do based on that cash basis or accrual basis, I think this is the accrual basis, you're going to put it all the information in your first sales side. You want to calculate how much the total sales and how much GST collected. So you can see GST collected sales worksheet. You put all of your income. Now you started to, so everything go to G1. Everything go to G1. So that's in this column, the column E, it's saying that how much the GST, total GST collected. You can see here, it will be here total GST collected. BAS 1A GST collected. So now we want to make sure that all the transactions are GST inclusive sales. For example, they assume that this is a export sales. Export sales, right? So what we're going to do if the export sales, GST not included. So you can put G2. You know, if you go to that uh, in your GST calculation worksheet, anything G2 export sales, you can see export sales, no GST. When you put the G2 here, automatically this will go out. Assume that this sales fresh vegetable, right? Fresh veggie. So fresh veggie, you put sell some fresh veggie. So GST not there. So you're going to put G3. So you can see there, G3 is no GST. Assume that this invoice is a residential rent income, right? Residential rent income. So what's happened? Residential in rent income is going to be a G4 input tax apply. So you can see no any GST collected because that's GST not applicable to residential rent. You no need to charge the residential rental rent income. So when we go back to that one, sometime when you see that bank statement, you may see um, your client maybe deposit some money to that business bank account as a capital for this called owner's contribution, right? So owner's contributions, what's going to happen? So you are not going to include that amount because you know owner's contribution not necessary to report to ATO. So you can delete whole transaction. So you're going to delete the whole transaction. So owner's contribution or owner's drawing not necessary to report any amount in G1 to that ATO. So you are completely take it out that transaction, right? So now you can see if you are export sales or GST free sales or input tax sales, you put it in this column G2, G3, G4 and take it out. Now we can go and see summary page. You can see G1, G2, G3, and it is adjusted your best 1A GST collected as well. So these labels where it's coming from, if you go to that internet and type the GST calculation worksheet, you can see what is the G1, G2, G3, right? So and best 1A. So this is the one you're going to enter into that zero practice manager under the GST side. Now we want to go to the GST collected. What does the GST collected mean? How much that money you can climb from ATO, right? How much money you can climb from ATO. Go to the expenses side. You put it all the expenses based on the accrual basis or cash basis, right? And now we're going to move into classify. So in the sales section, you just going to include everything in the G1. But in the expense section, you should say G10 or G11. G10 mean all the capital purchases, G10. G11 mean all the non-capital purchases. Capital purchases, anything you purchase for non-current assets, normally going under the G10. Your land and building and equipments and computers and furnitures and um, uh, all the appliances and etc. Normally we call as a inventory items. Normally this is the non-current assets in your balance sheet. So your G, that's go to G10. G11, your normal operational expenses and your cost of goods sold. When you prepare your P&L, profit and loss statement, whatever you say in your operational expenses, whatever in your cost of goods sold, we normally going to consider as a G11. So now we will see accounting fees, G11. So I can see most of these expenses are G11, right? We'll go to G11, G11, G11. I can say up to here, G11, because the normal expenses. Now you can see here, the computer printer, that's going to be a G10. Why? That's a capital asset. So you're going to put G10. And so like that, you're going to fill it out all of these lines, right? Sorry, that should be here, G10, right? So all of that. When you put it this information, fill it out, you can see in the declaration. Now we'll show how much G10, how much G11. Then you're going to put it that one. When we talk about that one, so each expenses you are climbing the GST this much, but we want to work it out. This GST, it's a we can climb or not. That's a one goal, GST review, right? We will see, for example, this accounting fees. If this particular bookkeeper who providing service to us, if he not registered for the GST, this 770, you cannot climb the GST. Therefore, you're going to put the G14, purchases without GST. And if you go to the bank fees normally no GST, G14. So like that, each expenses you're going to check, you can climb the GST or not. If you can't climb, you are going to be put it that in the other code. Assume that residential rental repair. I will just put it somewhere here. Residential rental repairs. Residential rental property repairs. Residential rental property repairs. 1164. Normally this is the G11. Now can we take it out the GST for residential rental repairs? No, because this is investment property. Residential investment property is the input tax supply. Therefore, we are going to say G13 because the residential rental repairs cannot be claimed GST. So now we will say, assume that this computer he purchased, he used for the only for private use. In that case, you're going to include G15. This means it's a private use, so you cannot claim. Assume that that computer he used 50% for business use, sorry, 60% for business use and 40% for private use. So in that case, you can claim 60% of that particular computer, that GST. So you can see the total will be, if you take it out this one, total will be $170. But if you put it here, 60% is making $104. So you're going to make the percentage, what is the business percentage in this column. Anything G15 here, you want to work it out the business percentage if it is required. If it's 100%, no matter, right? Sorry, 100% is 100, right? No, not going to change. So when you finish this all the work, you can see here, it will be a summary section. So whatever information you required for the full BAS, it is available, and we put it some the your business owner, some declaration, all the expenses are business, and here all the receipts to claim, and we'll put a little electronic signature automatic, and then you can go to here and print the report. All of these pages will come as a PDF, and you can save it in your desktop. Then you send it to that PDF document, that PDF document to the client, PDF document to the client to make it, he will check and he will come back to you and say, is everything's accurate? Then we can process the BAS. So this is the way we're going to process the BAS for client without clients without uh, accounting system. So now I will go back to that client with accounting system. How are you going to prepare, right? So what you will do, you're going to transfer from that all the Excel sheet information here. Then you're going to click save and lodge, not lodge, that you're going to send it to that. Now I will come back to uh, QuickBooks. So one of the accounting software, it's easy to understand. So as I said, whatever accounting software use, it's not a problem. But because that what exactly you're going to do, you're going to do the GST review. Most of the accounting softwares has a reports. So there are two reports you're going to look into that. One called GST detail report, other one called GST summary report. So your homework to find it out in a different software, where are these reports? Go to the report section. You can find somewhere here GST detail report. That's for your first work. Click on the GST detail GST report and then go to that which quarter you are looking for. Assume that I am going to look into the last financial quarter. For an example, click the run the report. It will give you all the GST code and income and everything. So what you did that in your Excel one by one, you check that like that you are going to check everything say applied here correct. For example, the best BPS more, if this is the one is the no GST applicable, you can go to back and change it. This is called GST review. In your Excel worksheet, you did that. It's very straightforward, G15 or G14. But here you are going to click and change that one in the actual transaction. So you know the GST rules, which products are GST applicable, which are not applicable. So all the transactions, you're going to check that one by one and make sure that correctly GST code applied. Here saying that GST not applied. You can say Air Asia, he traveled to other country, so therefore GST free. So like that, you check it everything. If it is something wrong, so I'm sure this is wrong, right? SQ, Adelaide, interest charge, GST free. So everything, when you check it, that one, if it is accurate, your GST review will be done. Then, so you with this we call normally GST review or GST reconciliation. When you finish this one, you will be ready to go to the BAS. You can see cash basis, accrual basis. If you are in accrual basis, click on the accrual basis and review. If you are cash basis, click on the cash basis and review. Right, the report will be changed. It is different for the different accounting softwares. For an example, MyOb going to give you 4 report: detailed GST report accrual basis, detail GST report cash basis. All right, so, but here you have only the click the button. So whatever accounting software you use, if you know that one accounting software, rest of the software is same, you're going to find it out where's the buttons, right? That's it. So when you finish that in your detailed report review, then you go to that summary report. So if you go to the GST summary report, all right, so you're going to click that cash basis, this one. You can see here last financial quarter, that's the one we are looking for. Last financial year, financial quarter. I missed that. Okay, here it is. So it will be give you how much GST collected, how much GST paid, different between two, how much you want to pay to ATO. So this is the information you're going to transfer to your BAS. If you require to do the BAS through that through your accounting system, you can do. You can click on the GST and prepare the BAS through here. So what you can do, you can put it the January 2019 to 31st of March 2019. Continue. You can see the same amount is coming here. How much GST? Then you can click the next. The whole GST amount will be here, but you cannot lodge through this one. So you're going to take it out the PDF of this document, and you're going to enter that information in your um, XPM, Zero Practice Manager. So that's called you preparing the BAS through the your accounting system. So no matter whatever accounting system you are using Zero or QuickBook or Recon or MyOp, all the different softwares have reports and especially GST detail report. So you can go and review the same way how I review previously and generate the summary report. That's called GST review audit. Then you can come and prepare the best. Some softwares called prepare best, some softwares called GST separately, so that you can find it out where's the two buttons and work it out that GST best preparations, right? So this is called best preparation through the accounting software. So I just explained here one accounting software, so you could work it out. Other accounting softwares, the same buttons, but the different colors and different um, uh, layouts. So now we will go to that in our income tax section. Now that's we'll move into best preparation. So we have two homework questions. Home one, casual 10, involved with the cash basis best preparation and accrual basis best preparations. So you continue that both and finish it off, and we will be provide the answer in a week time for you to check. So we expect you to prepare the best in your own, and then we will give you the answers. Right, so we'll move into that income tax return now. Right, we will move into the income tax preparation. Now you can see that how we're going to prepare the income tax returns. So you all knows that you already have how to create the clients, how to create the relationship. Anyhow, I will just go to that in our Zero Practice Manager and explain to you how to create the client. So go to the client and new clients, and you can see the different type of clients. So based on that, what tax return you want to prepare, partnership or individual or trust, you can create that particular client. So I'm creating for individual. You're going to put that your name as a manager and partner. This is the one link with your payment. So you make sure that you put the right your partner name and manager both your name. Right, so that's a way that PTP payment system linked. So you must make sure that you are putting the right partner and manager name. So it will be linked with your pay for your work. So second one, when you create the client, so that's now you're going to be one of that important information. You must link with that your a tax agent, which is Premier Tax and Bookkeeping, and the due date. Otherwise, you are not able to create your tax returns. Right? That's the way the software is set up. Now we want the important part is the your relationship. So that Zero Practice Manager populate that information between the other tax returns or best returns. So if you add that your relationship, for example, your spouse or your partnership details or your trust details or your company details, you can see beneficiary or partner or auditor or director or shareholder or spouse. All that information will be, when you prepare one tax return, it will be moving to that other tax return. So that's very easy when you do that. For an example, individual tax return, when you do, you require to report the spouse income. So spouse name and their date of birth and all the details. So when you link it from here, you can easily the data will be pre-populate between the tax returns. So that's a reason you're going to be, if you save the time using this relationship. So add the relationship is the very important. So now we will go back to that in our original slide. So you understand how to create the one. So we focus on that in our income tax return. If you go to that in our income tax return section, we have 1 to 24 labels. These labels are provided by tax office. Whatever tax preparation software you use, it's same. Every software, one will be salaries and wages, so two will be allowances and earning, right? And eight, you're going to provide us every year. So what is the information should be included in that salaries and wages? What is the information should be included? Number two, what is the information in the number three? So this information will be provided uh, in the instruction every year. So I link that one in the top. So I click this link. Now you can see, if you go to that at your site, Right, if you go down, you can see 1 to 12 questions. What is in 1, you can see here. What is in 2, 3, 4, like that. You can include, you can see every single label in your income tax return here. So you can see 1, 2, 3. What you're going to include here, it will be in these instructions. So you no need to that depend on anyone. You can go to this prepare instruction and see, 1, what we are going to include, 2, what we are include. So I don't want to read it. Anyhow, I will you cover some critical information. It may be helpful to go and check it where you want to check. So for example, the number 1, salaries and wages, all related salaries and wages will be included here. Number 2 will be allowance. I'm sure that one of the student asked the questions where I'm going to include um, income protection insurance payment, or that work cover payments. I'm not sure that I've answered correctly, but that should be number 2. Under the allowance, you're going to include your income protection related income, right? So, for example, loss of income is come under the allowances. So allowances, which is travel allowance or laundry allowance or uniform allowance or whatever allowances, normally we are going to include under number 2. Number 3, so number 2, you can see here, the student who asked the question, you can refer here, right? So your income protection or 600 insurance policies, normally that income will be part of the, your number 2. So now we'll go back to that my slides and quickly run through all the numbers. And if you want the further details, you can use this link and read that more detailed information. So that salaries and allowance we talk about, employment lump sum payment, and employment termination payment. So whenever that employee is leaving out from our business, employer required to pay all the employee entitlement. Sometimes the people not going to people that employees maybe not use their leave, and that's called unused leave, unused annual leave or unused long service leave to be paid when they are leaving from that our business. So when we pay that unused annual leave or unused long service leave, that should come under employee lump sum payment. However, if it is anything come under that sick leave, normally fall under termination payment. You can see I included some of the termination payment. You are going to report under the term number 4, amounts unused rostered day off. It means sometimes that employee is working 1 week more hours, next week less hours. If they terminated, or if they resign, or if they're dismissed, or if they're redundant, or if they are invalid, it means they are died, or that they are unable to work because of their medical conditions. In that case, so that rostered day of payment will be fall under termination payment. Amount in lieu of notice. So as per modern award or state award or enterprise bargaining agreement, so each employees will be given enough notice period to terminate their employment. For example, if you work 1 year, 2 weeks they should give to you, that before they terminate you the notice. So however, sometime employer terminate on the spot and sending to that employee to home. In that case, they should pay that 2 weeks notice of that amounts in lieu of notice payment. That payment will be fall under redundancy payment. Sorry, under employment termination payment. My apology. Payment unused sick leave, as I discussed previously, it could be under the termination payment. Sometime that you may heard about that employer provides some packages to employees. That's called golden handshake. When that employee they want to remove that from that particular position, if they can't remove legally, dismiss, because they maybe go to that unfair dismissal. To avoid that one, so that employer maybe provide a lump sum amount, for example 50,000, you're going to resign from your job, or you are going under package that called golden handshake. The last one, as I said, if his employee died or unable to work, the payment settlement you make will fall under termination payments. So this will be differently taxed. However, you no need to worry about that. If you take that employment termination payment summary and put it the right labels under the four, that will be correctly taxed. Very, very importantly, unused annual leave and unused long service leave should be go to that employer lump sum payment column. Other payment listed under 4 will be under termination payment. Then you have two type of government allowances. Australian government allowance. This is you can second one on Australian pension and allowance. The first part, more people who looking for job or who have no job, they are getting the benefit from the Centrelink, such as JobKeeper, New Start, Youth Allowance, and no study kind of payments. It's go to number 5. You can see this is somebody looking for job, or they are not in the job, they are getting some benefit from the Centrelink. Second one, that pensions and allowances, normally for people unable to work. Maybe someone leave late to the retirement age of 60. If they have no money, they maybe get an age pension. Or if you are a disabled, if your client is a disabled person, they maybe receive some disability support pension. So most of that six are people who are unable to work, they're providing that some assistance. That's come under number 6. So number 5 and number 6 are normally a government payments to your taxpayer. Then we will move into that number 7. There are two type of Australian superannuation we're going to talk. The first one, superannuation income stream. So while you are working, your employer provide 9.5 percentage of your salary to that your nominated super fund, or that's your default super fund. So that, however, you cannot access until you reach to age of 60, which is your preservation age. When you reach your preservation age, you are able to access that particular superannuation amount. However, you cannot get it whole amount back to you. You only can get it to support your day-to-day living. So you may have 500,000 in your superannuation, but you are not able to get it everything on one shot. So you maybe go and ask to that superannuation, pay that for income stream to your day-to-day living. For example, $2,000 per fortnight. So it will come to you $2,000 every fortnight. That amount will be support to that your client day-to-day living. That's called superannuation income stream, or Australian annuities from that insurance companies and societies. So when it is paid, that insurance company or superannuation, they will provide payment summary for these transactions. You can enter that information into section 7 or label 7. Number 8, Australian super lump sum payment. When you reach that preservation age or before, if you meet some specific criteria, you may access your superannuation fund from your super fund. That, for an example, your client's family member have a medical issue, they have some significant financial difficulty, they may be applied and get it some super from their super fund to that for medical expenses. This type of the withdrawal we call lump sum payment. So you take it all of your super back, right? Or that part of your super back, not the income stream, right? That will be reported under 8. That superannuation company will be provide that a statement. So you want to, based on the statement, you must enter the details in the number 8. Normally 7 and 8 are pre-filled, or 1 to 8, all the information will be in your tax agent portal. When you prepare the tax return, this information will be pre-filled. You may be recalled there's a COVID-19 early release super payment, 10,000, 10,000 two times, 20,000. This is not taxable. Not taxable mean It is normal cost that will be taxable. However, that when the government allow this amount, they very clearly said this superannuation withdrawal of this COVID-19 early release is not taxable. Therefore, you no need to include that 10,000 or whatever that COVID-19 early release super payment in your number 8 or anywhere in the income tax return, because that's a non-assessable income. So now we will come back to the number 8, attributed personal services. If you go to that in your tax return, I will share that you have the 2 personal services income. Sometime that tax preparers will be confused with this one. If you go to 9, it is saying that attributed personal service income. And then if you go to the 14, it is saying that personal service income. So always the question come from the consultants where I am going to include my personal service income of my client, because both personal service income, one with attributed, one without attributed. So what we are going to enter in that number 9, if you have if your client have a ABN and providing the personal service income, that will be under 9, sorry, under 14. If your client have no ABN, he's providing he's providing that personal service income, that will be under 9. So if you are so if you're a taxpayer, he has a ABN and practice as a sole trader business. If you get it at personal service income, it will goes to the section 14 or item 14. If you have no ABN number providing the personal service income, he will be normally getting a payment summary, a dash personal service income. That will come under personal services attributed income under 9. So if you have ABN, number 14, if there's no ABN, under 9. Right? So that's the way we're going to report in our personal service income. Number 10, cross interest from Australian sources. So no matter the bank belong to Australian bank or abroad bank, if they are in Australia, if you get it the if you get it that interest income from that bank, that will be considered as Australian source income. For example, if you have HSBC Bank in Singapore, you have account in Singapore. If you get the interest from the HSBC Singapore, that particular amount will be go to the foreign income under 20. But HSBC in Australia, if you have account and receiving the interest, which is going to be 10. All right, that's going to be cross interest from Australian source. Dividends. You may have shares in that companies. If you have shares in the Australian company, if you receive that dividends, right, as a share return, as a dividend, normally companies will provide dividend statement that will go to section or the item 11. All right. So that should be Australian companies. Other one, employee share scheme. The companies can apply to ATO to provide the shares in a discounted price or without any charge to that their employees and exempted from the French benefits. Right. So the tax normally, if you provide additional benefit, that should be French benefit, should be approved, that should be paid, tax will be paid by employer. However, if it's a company applied to ATO and get that approval for employee share scheme, whatever that shares they are providing to that, it will not fall under French benefit. So employee required to pay that tax. For example, the discounted price, if they provided their shares, and that what is the benefit employee getting, that will go to the under 12. For example, market value of the for say shares $100, but your company giving to you for employees only $80. So how much is they discounted? $20. That will fall under number 12 as an employee share scheme. Right, now we'll move into that partnership trust. So and now I move into the supplementary section of the um, income tax return. So we will see there are a number of items under 13 to 24. The first one is start with the partnership. So I'm going to the partnership tax return, so individual tax return, and we will say where's that information and how we going to work it out. So everybody can see that here. I will just make sure that you can see my Zero Practice Manager. Yeah. So if you go to here, you'll go to number 13. You can see partnership. Two type of partnership. One called primary production, other one called non-primary production. So what exactly you're going to get partnership? The distribution from the partnership, distribution from the partnership of the partnerships. There are two partnerships are here, right? So primary production or non-primary production, it is depend on that what kind of business you are in. For an example, if your business involved with agriculture or fisheries or livestock or any forestry related businesses, normally fall under primary productions. All other businesses normally non-primary productions. So it you're using the acronym wherever in the tax return PP mean that's a primary production, NPP mean non-primary productions. All right. So now we will see how you cannot enter here anything. So normally that information will be coming through the partnership tax returns. You are not going to calculate any partnership here in the individual tax return. Therefore, you should have a separate partnership tax return. So what I will do, I will go with that a partnership tax return. So if you link the partners in that partnership, automatically the information will come up here. So we will go to one partnership tax return, PTR, anyone here? Yep, here's the PTR. Right, it'll take a couple of seconds. Right, you can see here, one partnership tax return. These partners, you can see he linked with the two partners, right? Partner one, partner two partners, one 30%, other one 70% based on the agreement they entered. Very specifically, you can see normally when you create the tax return for individual or trust or company or self-managed super fund, you can see in this area taxable income and tax. But when you create that tax return for the partnership, no taxable income or no tax amount. Why? Partnership is not going to pay the tax, right? So normally it will be this loss or profit, it will be distributed to their owners. They're paying through that their own tax returns, which will be here in the third section 13. They will get it that their income and added to that their taxable income, and they will pay off. So partnership tax return is just a reporting. When you finish that, whatever you distributing your partner, it's automatically go to the individual tax return if you properly linked under section 13. Now we will see how is the partnership tax return you are preparing. If you go to that income and deductions, so don't worry about the deduction section at this stage, because you are going to prepare your business income and expenses in the schedule 5, right? You can see there are information about that incomes, but however not any of them not matching here. You can go to here and put it the other items, so you can put it all the different type of sales in your what you call profit and loss statement. So that's all of your income will go to other business income. Then you can go to the expenses and enter some expenses specifically tax office ask. Then you move into other expenses. So we will see one by one what are the expenses here. Foreign resident withholding expenses, we normally not involved with that anything. This is capital gain, excluding capital gain. So mainly you involved with that contractors and subcontractors and commissions. When you do the subcontracting or contract worker for your business, total amount will be reported separately how much it is. Then superannuation expenses. The superannuation expenses you can claim or deduct from your income whatever amount you paid during the financial year. Therefore, you should do a little adjustment for this superannuation. So whatever amount you paid mean, for an example, April to June quarter this financial year, you normally paying in July 28. So yeah, that payment will be cannot be deductible. In the same time, last financial year, April to June quarter, you paid this year, July 28. So that should be included. So when we prepare that superannuation, you must do the reconciliation to make sure that two-way you can do that. You can put that financial report accrual basis superannuation here and go to bottom. Under the reconciliation, you can do the adjustment here. So that's entirely up to you which way you're going to do. The tax office not ask you to do all the time reconciliation. If you want, you can enter the financial report accrual basis total superannuation for this year. Then you have the paid amount, you can adjust through that your expense column or income column. That's entire you can add here and say in the superannuation adjustment how much you can include. So that's entirely up to you which way you're going to do. Then cost of goods sales. So cost of sales, which is your um, inventory or whatever that amount you sold it, what are the cost of sales will come up here. And bad debts, that's anything that's non-collectible, genuinely non-collectible. It's mean the client is the bankrupt, or blank clients the legal insolvent, or you take that all the reasonable step like a debt collecting agency and file the legal action, still you cannot collect, it will become as a bad debt. Lease expenses, whatever lease you make from outside, the lease expenses will be fall into here. Rent expenses will be separately here. Interest, total interest, royalty, LVP, said low value pool assets. So if you have a low value pool here, that will be fall into here $153. So I mean less than $1,000 assets, you're going to pool it. And again, small business entity immediate write-off, which we know that if you purchase assets after a certain date, so 12th of March 2020, you may be able to deduct $150,000. So you want to go and check it. Your immediate write-off rule, there's a different rules from the different date. Previously 20, again 25 and 30, now $150,000. So if you meet that one, you can deduct here. If you want to put it that in the pool, you can use that small general pool method that will become up here. Then we will go to that any other normal depreciation and motor vehicle expenses. Both method, cents per kilometer or logbook method, can be entered here. You can see, I don't know which one, this one, that's I will just leave it with the logbook at this point because more than 3,400, so surely that will be a logbook. Repairs and maintenance you're going to include, and if it is anything not come under here, you're going to type it one by one and put all the expenses in the bottom. That's called you calculating your net income from partnership. So you can see here in the bottom, net income from the partnership. So how much? $292,000 of income should be reported or distributed between partners. You already link the partner. If you go to here, you can see manual or percentage. If you percentage, whatever percentage you included previously, it will be show here as a income. If you the manual, you click on the manual and going to include how much the income, right? So 150,000. So whatever partners agreed, you can use the manually or percentage, right? So when you do that one, in this income, for example, this guy, who is this? Um, Yep, Jason. Jason will receive this total amount as a in individual tax return as a under this column as a individual income. So that's called partnership and trust. Now we will move into the next one, 14 and 15, the personal service income and net business income means sole trader business income. Both will be reported in a same tax return under business section. So now we will go to that in the business section. You can see business and professional items. These are the um, sole trader or people who have ABN with the personal service income. If you say yes, you're going to put that personal service income. If you say no, you're going to bottom and include all the sole trader income under P8. So you same as what I discussed for that in your partnership tax return, all the labels are same. You go to the other income and include that other income, how much that, whatever activity you have, for example, cleaning income or school cleaning or whatever, you're going to include here as a income. So now we will see here $250,000 income. So all the expenses same as previously we discussed. You can see we are calculating the cost of goods sales. For example, you have open stock $15,000 and you purchase 165,000 and you have closing 25,000. So you have that, cost of sales 155,000. You can see which method you used. And the foreign residents, nothing involved with that. Contractors, you can put it how much. Superannuation, I explained. Bad debts, all the same category, it will come up here. Then if you have some additional expenses, you can put it here, and accounting and electricity, gas and all these expenses you can include here. So when you finish it, this one, it will show you how much that your income. For example, here, net income $95,000. If you go to that your income section, right? So that's, I will go first. Sorry, I will go to that 95. So how much? That's one 95,000. That 95,000 you manually enter here, other income. So when you enter this 95,000, if you can go to that your income section, number 15. Number 15, that's the one sole trader income. You can see 95,000 here. So, so that will be included in your taxable income. You are paying the tax. However, if you assume that, if you assume that you have make it business loss, your sole trader business making loss, right? So I'll go back here. I will change that your expense as a 365,000. So how much that in our loss? $105,000 loss. So we'll go to 105,000 as a loss here. So now the question will come up. Your business income can be offset against your other accessible income, right? So against your other accessible income. That's the question we talk about under non-commercial loss offset, right? So it's mean, so you have some income, the income from that here. For example, we will assume you have, I'll put it a new item CC for you guys, Australian wages. We'll say you have $200,000, right? Yeah, $200,000 accounting business, accounting employment or something. You have employment income, $200,000. You have the loss, $125,000. Can we offset again this income? That's the question. So now we will go back and see, when we go back to that in our business, we see have how much the loss? $125,000. $105,000 loss. So this loss can be offset against other income or not. It is depend on in your test. You remember we talk about that number of tests. So you want to go to in this section and you want to do that test. So we will see this is a sole trader business. And so your loss, net loss will be this much. You have the two options. So what are the two options? One, you can carry forward to the next year or defer to the next year and offset again this business income next year. Or you can offset again other income. If you want to offset about the other income like a salary or interest or dividend, you must pass the test. We clearly explained to you what are the tests like accessible income test, profitable test and real property test. And any of the tests if you pass, what happened? This 105 will be reduced your taxable income from other sources, right? However, if you not pass the test, if you not pass the test, right, we'll go to here. If you not pass the test, P9, I said P9, right? So click here. So if you not pass that any of the test, so what we're going to do, loss must be deferred. So you can see it's going to be increased soon. So this 155,000 will go to that your business, your income section, section 1616, and you're going to put as a deferred commercial loss, where you are going to put it under the other. Is a primary or non-primary? I think non-primary. You can see it's going to be increased now your taxable income because you cannot offset. You're going to carry forward to the future year. So how you going to offset in the future year when you do the tax return? If you have that um, deferred loss from the previous year, you can go under the section. You can see here net income, then deferred loss from the previous year, and you can put it and reduce if you have next year some income, right? So this is the way you're going to do that deferred income. So now I will come back to that in my 16. That's called deferred commercial loss. We entered. Next one, net farm management deposits. What do the net farm management deposits mean? If you're the farmers, when they are earning sometime higher income, sometime very lower income. So if they're earning that higher income, so they what they can do, just to say right, they can open an account with the bank. It's called net farm management depository account. They can deposit some money from this year income, and they can reduce the accessible income for this year. For an example, they make it 200,000 profit this year. They take it 100,000 to that net farm deposit. So their taxable income will be reduced by 100,000. Why? That when you put it in the bank, is not going to be considered as an income. However, you cannot have access to that money. Only thing you can take back to that your business. When you take back, that will be included as a accessible income. Assume that next year you lost with that your farm. If you withdraw the money to that your farm business account, it will come as an income, but it will be you are maybe paying the lower tax rate. So this is the reason that government, to support the farmers, they're managing a farm management deposit and repayment. So you take it out some business income, put it in an account that you cannot have access to that money for your private purpose, but you are reducing your accessible income or reducing your taxable income and making your the total tax less. But next year, if you have some loss from the farm, you can take that money and adjust it, right? So this is called net farm management deposit. Capital gain, we talk very clearly about the capital gain. Now we will go back to that other area, foreign entities. I will go back to that in our um, zero practice manager. Assume that you all can see that zero practice manager. You can see number 19, number 20. Number 19 involved with that one. For an example, if you control a foreign company, how you are going to control the foreign company? Or how you control the foreign company? You may have more than 50% that shareholding in a company. If you have more than 50% of the shareholding in a company outside of Australia, the dividend you are received from that company will be reported under CFC income, control foreign company income, that will be reported under 19. If it is a normal dividend you are received, that will be go to the foreign source income. You can see in the foreign source income, you're going to include your employment income, your pensions, your annuities, your rent, and all the stuff. They are using the terminology, the net foreign income, net foreign rent, net foreign pension. Yes, that's right. But however, you must make sure that you are going to include whatever foreign tax paid, you're going to separately include in this one. So you can see here, if you go to that expense toward the cross, how much the cross amount, how much the expense, how much the net, right? So if you go to the new item, you can see you're going to include how much the foreign tax paid separately. So therefore, so that when you are including this income, foreign income, you're going to include foreign income tax paid. That amount will be, normally it will come back. So you make sure that you are entering the cross amount and expenses and make it net income, but tax amount will be separately reported as a foreign tax paid. So that's very clearly we talk about that one. So income should be reported cross income minus expenses. The tax may be included in the cross income. That's a very important. So whenever you have the rental property, we are normally do through the rental schedule here. However, if you have a foreign rental property, you're not going to have a separate that rental schedule. You can do that through that um, your Excel worksheet and include here how much your foreign net foreign rental income. Net mean total rental minus the rental expenses. Any tax paid should be reported separately how much tax paid, because that's involved with the foreign tax credit. if it is agreement between Australia and that particular country. So when you work it out 2021, we already talk about that one, the rent. You go to create a rental schedule, and this is the Australian residential investment property, or that rental property what you have in Australia, you're going to include here. All the investment property cross rent and interest deductions will be reported here when you report it through this schedule. Then we will go to the bonuses from the life insurance company. We talk about that one in the week 2. So anything you receive bonuses from your life insurance policies or friendly societies will be under 22. Forest management fund I will cover later. And 24, if you not include anywhere in that income, which is taxable, you're going to include under other section. So that's going to be finish of the income sections. Now we will move into the deductions. D1, the car travel work related car expenses. So this is only include your expense connected with your employment. Anything come under this category, D1 to D10. So it's going to be your employment related expenses. So there's a D2, D15, all of our expenses, but however, some of them we can include business as well in the down. For example, D12, personal super contribution, you can include the business while you have a sole trader or partnership. So we will work out that now. Number one, the work related. If you have a sole trader car, you go to the business and include under the motor vehicle, right? Under the motor vehicle expenses here, right? Where's that motor vehicle expenses? Motor vehicle expenses. But this one, this deduction all are your employment related, work related car. So there are two methods. So cents per kilometer or logbook you can include. And if you the car should be less than 1 ton or fewer than 9 passengers, that expenses fall under D1. The car more than 1 ton or more than 9 passengers, no, that will be fall under D2. If you using that any other travel, using the train or bus or flight tickets or Uber or taxi or ship or private jet, any travel related expenses will be fall under D2. It's including car parking and toll expenses fall under D2. Also, when you travel in your work related travel, your accommodation and your food and meal and your incidental expenses will be fall under D2. Work related clothing, we discussed very clearly your protective clothing or in your occupation specific clothing or in your uniform, like a unique and distinctive characters like the logo and colors, and that will be fall under D3. Laundry expenses and cleaning also same thing. Work related self education expenses, as we discussed previously. So your study must be connected with your current employment. So the employment where you are getting the income for this tax return, that should be connected with your self education. For example, you are a bookkeeper studying a bachelor of accounting, there's a direct relationship with that one. So you must improve your skills and knowledge to do that your current employment, or likelihood of improving your income, likelihood of improving your income in that previous your current employment, that could be deducted as a self education expenses. International students, they cannot deduct their first degree or first course what they are following here. That expenses cannot be considered as a self education expense. So for an example, a student moving to here bachelor of accounting, he got the job here accountant or bookkeeper, but still he cannot deduct his first degree. When they start to the second program, yeah, they are able to deduct. Other work related expenses like a union fees and your computer you are using or your internet or mobile phone, all the expenses fall under other expenses. Lower value pool, if you're using that for any of that item for your work related, if you want to put it under the lower value pool as a less than $1,000 assets, you can create a lower value pool seats and you can include that one under D6. If you receive a interest income, any expenses like a bank fees, that can be deductible here. Dividends, if you receive a dividend, you may be deducted. Two type of expenses you can see in your interest for that your investment on shares, or that's your expenses including that getting the financial advice on the share and share brokers fees and etc. You can include in the D8. Gift and donations, you must make sure that there are conditions met. So that gift must be given to the deductible recipient. How you know that? If you can go and see that in the ABN lookup, that particular school or particular non-profit organization must be listed as a deductible recipient. Then that institution who receiving the money to give you a receipt saying that these expenses, the purpose they're given this money will be deductible. So it should be so in that receipt, this is tax deductible. If they satisfy that conditions, that can be deductible under D9. D10, cost of managing tax affairs, tax agent fees, travel to the tax agent, and buying any materials or reading materials or training for the cost that income tax related matters fall under D10. D11, I am parking now. Moving to D12, personal super contributions. If you are a sole trader or partner, if you provide that yourself for some superannuation or super fund, so that particular superannuation cannot be deduct from sole trader business income or from partnership business income. That should come under D12, and you can include as a personal super contribution, right? So they're very clear. This amount should be not included in your sole trader income tax expense or partnership income tax expense. That should be come under D12 as a personal super contributions. And deduction the pool project. So if you are running a project, for example, 5 years, the total assets purchased for that pool will be deducted within 5 years. That's called deduction for pool project pool. Forestry manager, I'm going to park. Any other expenses, we're going to put under other deductions. Any other expenses, we are going to put under other deductions. So one of the very important stuff, you can see your income protection insurances fall under this category, other deductions, right? So any other stuff you can see here under the other deductions. Now we will move into Medicare. You all know that there are two type of Medicare expenses. One called Medicare levy, other one called Medicare levy surcharge. Now we will look into that M1 Medicare levy. Medicare levy, as I discussed previously, there are four categories of people will be paying reduced or exempted from the Medicare levy. One, so foreign residents, they are not going to pay the Medicare levy. Australian resident, temporary Australian resident who are not eligible for Medicare benefits, they're not going to pay the Medicare levy. So if you have a dependent children, you may be paid reduced Medicare levy. And if you are in a medical conditions, for an example, you have a blind pensioner or veteran, you may be paid half days levy exemption or full day levy exemption, depend on your medical conditions and etc., which is approved by Human Services Australia. So now we want to see how many number of childrens. If you have dependent children, if you put it here, your Medicare levy will be calculated differently. You can see immediately it's reducing. Assume that you are a foreign resident and you are not paying whole year you are in Australia, you're not paying that tax. You're going to say 365. You can see how much reducing, right? Only 4 or 5,000. If you want to take this Medicare exemption, you must get that a levy exemption certificate from Human Services Australia. How you going to get it? So the information will be provided to you. You're going to provide the application to that particular department who is issuing the letter, and they will issue to you. You can provide to you. Without this levy certificate, you cannot claim Medicare levy exemption. Very clear. You cannot claim the medical levy exemption without this certificate. Why is the number of days? Sometimes taxpayer move into Australia middle of the financial year, or that only last part of the financial year. How many days they are here? That's the days you're going to include here, right? Because that's not going to be the whole year, right? So whatever the number of days they are in Australia, or they entered into Australia, from that day how many days they are not eligible, you can include. Or somebody maybe get the Medicare card or Medicare benefit during the financial year when they get their permanency. So until they're getting that Medicare benefits, what is that, how many days you're going to include. So as I said, half levy exemption involved with the medical exemption, which is, I put it in that link. You can see who is going to be half, who is going to be full medical exemption for medical levy. Now, Medicare levy surcharge, if you are a foreign resident or if you're not paying Medicare levy, they are not going to pay the Medicare levy surcharge. So foreign residents and who are not eligible for Medicare benefits, they are not going to pay Medicare levy surcharge. You can say no, all the days what they are here, no need to pay. Second category, if they have private hospital cover, very important. There are three type of private insurance will come up here when you do the tax return automatically. One called ambulance cover, other one called one ambulance cover, second one called classic cover like a dental and eye and physio. They are not come under this category. If they have full private hospital cover, you can see yes, it will be exempted to their medical levy surcharge. Third way of exempt the medical levy surcharge, if their income less than threshold, medical levy surcharge per threshold amount. You may remember we talk about the 90,000 or 180,000 for the family. So what is this 90,000 include? Taxable income, reportable friendship benefit, reportable super contribution, net investment loss, net property rental property loss, and any distribution from the family trust. So which is tax not paid. So in that case, how are you going to know this all the stuff? You go to the your income test section, go to IT8 and see income for surcharge purpose. How much the income for surcharge purpose? 277. So you cannot exempt using this rule. You may exempt using the private health insurance, that's fine, but you cannot use because he's over 180. To see that income for surcharge purpose, you click that income test and click the IT8, it will be here. But even though he's 277,000, if we have medical health insurance for private hospital cover, we can exempt. If you have no private health cover, you can say no. But if your income is less than 180 for family or less than 90 for single, still you can exempt that one, right? Or if you are a foreign resident, you can say no and exempt. If you are not eligible to Medicare levy, Medicare benefits, no. So Medicare levy surcharge, you can exempt in the four scenario. Number one, if you have a health insurance for hospital cover, you can exempt. You have no cover, but if you are a foreign resident, you can exempt. If you are a Australian resident, no Medicare benefits, you can exempt. Or the last one, you have Medicare cover, you have no private health cover, but your income less than 90,000 for single, or threshold 90,000 for income, or 180,000 for family, you can exempt. So four different circumstances you can exempt Medicare levy surcharge. Very important, right? Excellent. Now we will move into so in our where we are going to move in our PowerPoint. So I cover the rent and deductions and Medicare levy. So it's clear. Now, Medicare levy, yep. So sole trader, I cover everything. So critical information here. The personal super contribution should be reported under D2. You cannot deduct from your business income tax. And owner's wages should be not considered as a wages, so you cannot deduct. Owner's capital or capital interest not going to be calculated. Superannuation, I already said very clearly. For the businesses, you are going to include opening current minus closing balances. Small business entity have a offset, so I will show you where it is. So when you click that offset, it will be a maximum of $1,000. It will be offset. If you go to that US section, where's that 15? The question will come up, you are small business entity or not. If you click here, your tax amount will be reduced, right? But unfortunately, I put it some other information here because it's a loss. It's not going to be a profit. So that's the reason. I will go back and change it. This one, for an example here, we will make it some profit and see how that change, right? I'll say 65,000, right? So it's good. So go to here, income, and 15. You can offset for partnership as well, right? Okay. I want to 16, take it out that loss amount. So normally $194,000 tax. Oh, is that coming still? I know why I said, because I did not delete from that P9 maybe. Yeah. Right. So I will go to that now income section, go to that your 15. That's coming from this 105,000. It's not picking up some reason. So I will see that why is still showing as a 105,000 loss. Yeah, I think I did not take it out. Oh, yeah, I know I said. I include someone, right? So we make it now profit. So now we will go to that income section and go to the 15. Still coming 105 loss. I couldn't work it out. Where's this loss come from? 50 hour, yeah. Oh, it's going to here. Business income and 15C. I entered 205. That's the reason. Right. Now it's easy. So now we will go back to that your income section and see in your 15. So how much that income? It's not come up again anything. So I will go to that business section and go back to that in our 15C. How much the profit here? Oh my goodness, it's too much of profit, so you cannot work it out. I will just make it that 250,000. That's easy for you us to understand. Little number and go down and see where's that, how much the profit, 195,000. So you're going to add that 195,015C. Now we will go to the income section. Now you can see we have 100 on the income section. You can see under 15, 195,000. Right. Now you are going to say if it's a no, $1,000 more. If it's a yes, $1,000 less. Right. Finally, we got it. So that's called small business entity. You want to the section 15 for here, or if you are a partnership in the section 14, you want to say that's a small business, right? So you want to say that's a small business. So if you include that details, your tax will be reduced maximum of $1,000 as a small business entity. So now I will go back to that my PowerPoint, the personal super contribution. I talk about that one, contractors payment. So Uber income. I will quickly share with you the Uber income. Um, I will see one annual statement. So can you see that Uber income? I will share that. So Uber will be, you can go to the Uber's login and get it the Uber, the full details like this. So it will come up here, total income $116,000 and referral and incentive and tips $64 and other deductions $5,000. What is the meaning? The cross income from the your service you provide to the Uber $16,000, and they provide you some referral fees of 64. So this plus this your income, and this the amount they deducted from your 16,000 and take it to themselves as a Uber service fees. So this amount including GST, because of that cross transportation. There's a case against OATO versus Uber. They decided all the Uber income should be included GST. So if you divide by 11, you will get that you 1.1, you can get the GST exclusive income, and that's the amount should go to that your accessible income. So that 16,000 is the GST inclusive amount. So you want to take it out the GST component, balance only that excluding GST only, you're going to include as a income. For example, in this case, so how much the total income? Give me a 2 seconds. How much the total income? 16. Sorry, guys. Uh, Give me a 2 second, guys. I'm just going to calculate and tell you how much. Otherwise, it's easy for you. 16,907.52. That's the total income including GST. You're going to put it 1 point divide by 1.5, which is 15,427. Only you're going to include in your income. The $1,542.70 GST, you're not going to include. That's already you settled through the BAS. The $64 what you're receiving from Uber. Uber is a foreign company. When they provide this one is a GST exclusive. So you're going to put that $64.77 as your income. So total income you receive from Uber, $15,492.52. You include in your sole trader business income under other income section as a Uber income, this much. Now you want to know how much you can deduct. You can see already $5,400.86 Uber deducted from your for $16,000. So this 5,400 will be deductable. However, you want to take it out the GST component. So if you take it out the GST component from this one, $4,909.87, that's your deductions under the business expenses commissions. Uber commission, you can include 4,909. This is a common mistake we do. We normally include the total income without deducting these deductions, because actually your client entitled to deduct this one, because that Uber charge this money. Honestly, Uber paid to them 16,970 plus 64.77 minus 5,486. Therefore, this 5,400, take it out the GST component, which is coming 4,909. That's the amount go as a deduction. 16,970 divided by 1.1, which is 15,427 plus 6477, no GST. So total 15,492 will go as a Uber income. So just I explain, because this is a common issue when we have in our tax preparation for the Uber. Partnership, there's not a prerequisite for the legal agreement. However, the partners agreed what the amount they are distributing between them, you're going to distribute based on that. Partnership distribution, I already discussed about very clearly, based on the partnership agreement percentage or whatever amount they agreed, they can distribute between them. Profit or loss will be distributed to that partner's individual income tax return. Right? Partnership not going to pay the tax, so it is required to do the partnership tax return because of the compliance purposes. Rent from the jointly owned rental property or interest or dividends, normally we are reporting through the 10 your interest, and 11 your dividends, and 21 your residential rental property. Not going to prepare the partnership tax return for this type of income. Right? So what we are going to do, you're going to go and calculate the partnership net income, not the profit, net income. We call PNI. PNI should be distributed between the partners. Loss or profit, it will be distributed. So, however, you are not include in the partnership tax return any interest on capital paid to the partners, any salaries paid to the partners cannot include. Normally, partners can not going to have a salary, even though they get withdraw some money from the partnership, cannot be considered as a PAYG salary because that's a partners not able to pay themselves a salary. That's the tax rules. And interest on drawing, you are whatever that amount they draw, if you paid some interest, that cannot be considered as a partnership expense. Drawing by cash by partners, no. Superannuation for partners, as I mentioned, you cannot deduct from your partnership income, but you can deduct that superannuation self super contribution under the D12 for super individual tax return. Partnership and loss, any loss make it from the partnership can be um, distributed to the partners if they meet that non-commercial law rules. You remember we talk about that profitable test, or real estate test, or accessible income test, or no other asset test. If you meet that test, you can deduct from your other accessible income. If you not meet that test, you cannot deduct that particular loss. You can carry forward to the future years to offset again that losses, right? So the partnership tax preparation instruction will be here. You can go into complete. So this week's, so we next week not going to be a workshop. So you will be have 2 weeks, 1 week break. So you're going to work out. We will put it under the homework 10, the preparation of best manually, cash basis and accrual basis. Then you're going to prepare the tax return for individual and sole trader and partnership. So answers will be not provided this week. Answers will be provided only week after, next week, Monday. And you do it in your own, and then we will give you the answers with couple of mistakes. You want to find it out the mistakes and send to that your tutor and saying that yes, this answer is wrong because of this rule. So you can go to ATO and find it out the right rule, and you can defend yourself if you not agreed with your answers, right? And that's the way we're going to learn this independent learning of the tax returns and passes. So looking forward to see you guys with another 2 weeks time. It's been next week. There's no workshops, and good luck with your homework 10. It is very important to you to learn that skills how to do that in practical. Thank you, everyone. See you next time.